What's next in FinTech? An investor's perspective. I would like to call upon Mr. Rajesh Sehgal, Managing Partner, Equanimity Investments, as our moderator for the session. Rajesh. Artha Singularity Ventures. Dhyanesh Shah, Principal, 8 Roads Ventures. Deepak Jain, co-founder Flexiloans, and Nitya Ishwara from Multiple Alternative Asset Management. I would now request Mr. Rajesh to take the session forward. Run the mics.
Hi, good afternoon, everyone. It's very heartening to see that after lunch we have so many people who still want to hear about this boring subject on FinTech. I think the earlier panel has set the tone, on a variety of issues. I have some very excellent panelists here who are going to help us solve some of the problems that we all face when we are looking at FinTech as investments. Or on my right-hand side, when we are looking at FinTech as a business. So I have an entrepreneur here, and I've got investors here, and we'll try to, we have 30 minutes, we're going to stick to the time. So I think without further ado, what I'm going to do is quickly let each of the panelists say very few words about themselves, name what they do, etc., and then we'll get to the chase.
Let's start with the entrepreneur.
Thank you. Hi, I'm Deepak Jain. I'm co-founder for Flexiloans Technologies. We are a SME lending digital platform. We do loans across 1,000+ cities pan-India.
Hi, I'm Nitya. I'm from Multiples Private Equity. We are investors in financial services and increasingly looking at FinTech. So would love to share some views.
Hi, I'm Dhyanesh Shah from 8 Roads Ventures. So we do venture and growth stage investing across sectors and specifically active in financial services and FinTech.
So my name is Vinod Keni. I'm a partner at Artha Venture Fund. We are a sector agnostic seed and early stage fund. One of our focus areas is financial services and FinTech.
Excellent, guys. So let's start with you. Simple answer, FinTech, made up of 2 words, fin and tech. I want you to just tell me, and because you run a business there, how much of FinTech is fin and how much of it is tech?
So it depends on what side of FinTech you are on. So if you're on the lending side,
Wait. When I was doing my MBA,
depends.
The right answer was always, it depends.
Right,
You're sleeping in class and then the professor asks you something, you get up and you say, you know what, it depends.
Now you set the tone for this session.
So please,
So
let's get to the chase.
on the side of lending, where I belong to, it's a problem of credit you're solving, and it begins with finance. But you need to bring in a lot of technology in your execution, and if you're not able to bring a lot of technology and data in your execution, you're not creating the key moats or strategic values which are required for you to differentiate versus the traditional lenders out there. So it starts with the problem of credit, the finance side, and then goes to tech.
So how much of it is fin and how much of it is tech?
There's no number there, but you start with fin and then you go to tech. So
Guys, you like me pushing him or I should let him go?
push hard.
Yeah, push hard. Yeah, pick a number. I'm asking you this, I'm pushing you
Early
this.
stages, 70% fin, 30% tech. Mid stages, 50-50. Late stages, 80 tech, 20 fin.
So it depends. All right, let's ask the investors. When you guys are evaluating business models in the FinTech space, how much importance do you guys give to the fin part of it, the understanding of the entrepreneurs, their understanding of fin and their understanding of tech, the team, etc. We all keep saying that, we look at the team, the founders are the most important thing, etc. So how much of focus and attention do you guys give to the fin and the tech part of it? The lady first, yeah.
So to make things simple, because I'm from private equity, I understand less of venture, we defined it as saying there is the FinTech and the TechFin. So I would put all the NBFCs, the financing, whether you're aggregators, whether you're actually lending as an NBFC in the FinTech. And I would put business models like payments, data service providers, several others in the TechFin. So when we look at teams, and one of the things that we are interestingly seeing is this whole pivoting of models also in the FinTech side. People started off saying, oh, I don't need to know how to build a balance sheet. And this was 5-6 years ago. All I need to know is I need to look at data, decide if this guy is credit worthy, and then I'll find the best bank who knows how to finance themselves. And that is classical theoretical efficiency for you. I can do this best, the bank can do the financing the best, and together we will be a winner, and that's how life went. But life has not been that way. Because this whole question of who captures what value, do you own the customer, and a lot of things have come in between. So increasingly, I find the FinTech side has started building balance sheets, recognizing the value of Fin, and that's how it has kind of flown. So that's one easy way of thinking about it.
Dhyanesh?
Yeah, I think it's tough to not agree with what both of them have said to start with. But the way we've been looking at it is you start with the Fin side of it. Leave out something like a payments, like you mentioned, which is very tech-oriented. But if you look at the traditional products, which is lending, savings, insurance, investments, you start with the Fin side. And the way we've been looking at tech is, what is the problem that tech can solve? Can tech really solve that problem? And if tech solves that problem, what is the benefit that accrues? And typically that benefit will accrue on the P&L or the balance sheet. So the benefit could accrue by the customer acquisition cost is very high because it's low ticket, but should I be able to do it using tech, I can bring that down by X%. Or the benefit could accrue in delinquency, which is using traditional methods. I cannot, like in your case, Deepak, a lot of your customers, you cannot use traditional methods to ascertain the credit quality, but I can get to a certain better outcome using technology. So I think we've been staying away from Fin versus tech or tech versus Fin, but rather saying it's all Fin, but tech is allowing you to do things which otherwise you could not do, and now you can do should this work.
Completely agree with that.
So it depends. So since we are seed and early stage, and I look at a lot of those which are sort of at that idea or beyond the idea stage, I think what is really important is the fact that it's tech sort of making Fin much more efficient, right? Tech sort of saying, can I take inefficiencies out of what has been traditionally a lending practice or even a borrowing practice or even supply chain or whatever else is out there, and can I make that a lot more efficient? Because the way finance is and the way finance has been for centuries is not going to change, right? And the value, all of that is going to be there. And finance is probably one of the most conservative sectors when it's sort of, I mean, it's one of the biggest adopters of technology, but it's also been one which is sort of said, I'm going to be very conservative when it actually comes to this. I want to see real value before I can actually sort of look at this, right? So from that perspective, I think tech is more of an enabler. And if it can sort of enable and make it more efficient, now whether it's 80-20 or 60-40, that's a debate that I think as, you know, through the life cycle of an enterprise, you sort of see those changes happening. But that is important, and the ability for the entrepreneur to sort of understand that entire ecosystem and the finance world and sort of come from that background, or at least have people who sort of understand that background, I think is really important. I think the earlier days of, you know, technology guys saying, hey, I can sort of build this and I think it can make this work, I think is not really going to work anymore.
Excellent. So let's stay on this FinTech part of it. We all know Mumbai is the financial capital of the country, and Bangalore is now the technology capital, the tech capital of the country, and New Delhi is the capital of the country. So when you're setting up a FinTech, would you rather be, what are the advantages that you think, Mumbai has to offer?
So I think, Mumbai, of course, financial capital, right? I mean, you have the regulators here, you have most banks here, you have the stock exchange here, and a lot of people have sort of traditionally been in the finance world, which is, lending, all of that has sort of been here. You've just, for ages, you've sort of seen bill discounting services and all of that sort of being here, right? So from that perspective, I think it has that domain experience and the expertise that already sits here. And I think if you sort of have to just layer the technology piece, I think it's a lot more easier to build that out of Bombay than anywhere else. A, because you have the domain knowledge and you also have the access to regulators. I mean, all the regulators are all sitting out of here. And in an industry that's so regulated, one of the first visits is to a regulator. And I think that makes it a lot more easier.
So you're saying Mumbai has the advantage of the old world finance or being the birthplace of finance in the country, and therefore that should lead itself to become kind of a fintech hub, for lack of any other word, right?
Which I think the city should has been trying to promote now much more vigorously.
Nithya, let me ask you, because you look at a little more mature business models, etc., and therefore I presume you've looked at a lot of these financial companies, larger companies. In this whole technology game, we have the disruptors and we have the disrupted. Just taking off from what Vinod said, do you think Mumbai will remain the old world finance capital that we call it, and the dynamic new world technology-oriented fintech companies are just going to disrupt what Mumbai has to offer? Or do you agree with what Vinod said, that, okay, we have the base, let's just put a layer of technology and build it up?
I would tend to go with the latter. I think increasingly we are also seeing that a lot of fintechs want to collaborate with the larger banks, all of whom sit here in some way. So I also find one is regulators, of course, and you cannot take two steps in financial services without going to the regulator for something. So I find a lot of businesses also have their key teams here, but also have a little tech team sitting out of Bangalore. So it seems to be morphing into something, but it makes a big case for people to be around here, talking to the banks. You find we are investors in RBL Bank. Every time I go there, I find at least 5 or 6 fintechs hanging around, talking to RBL to see what can we do together. And that's now, it must be happening with the other banks as well. So it makes a lot of sense in co-developing businesses also to be here.
Makes sense. Let's talk to you about the regulations, right? Because she just said that you can't take 2 steps. I think you can't even take one single step without running into the regulator or regulations or this whole dynamic. I think the regulators are the only people who are more nimble and dynamic than entrepreneurs, because they change faster than entrepreneurs can adapt to it, right? So how do you manage this whole regulation piece, especially in the business that you are? And I'm sure you interact with a lot of entrepreneurs across different fintech areas. What is the general feeling among entrepreneurs vis-a-vis the regulator?
So, see, we, talking specifically about us at Flexiloans, so we, when we started with the lending model, and we began with an NBFC. So we signed up to become a regulated entity. Okay, and from the beginning, we created a culture where there was a team specifically looking at regulations or meeting people at the regulator's side, interacting with them, and ensuring that we are on the right side of regulations always. Yeah. Having said that, you're right that changing in regulations, or at least like the whole issue around the eKYCs and eNACHs and etc. So a lot of fintechs were building capabilities around that, or had built capabilities around that, and one fine day, all of that was completely not usable. A lot of business ideas, for young entrepreneurs here, and many young entrepreneurs can relate to that a lot of business ideas got killed. Just because they were catering to that specific area and not part of the whole overall ecosystem. So, but someone's loss is some other's opportunity, right? So I know that a few fintech startups made literally tons of money out of that whole regulation change, and they just got 10-15 customers out of this whole change in regulation. So
excellent. Let's ask you, Dhyanesh, regulation. So as an investor, when you're evaluating fintech specifically, how much of weightage would you give to the regulations around that sector, or how much time do you guys spend in understanding or trying to even talk to the regulator, saying, what are you guys thinking about this space? Does it play an important role in your evaluation process?
So it does. I wouldn't say it's the #1 criteria. Definitely not. So, of course, this does not mean we would go ahead and invest in something which is blatantly violating all regulations. That's not what I'm implying. But it definitely, regulations can make it a black swan event, effectively, and which is why you cannot choose to ignore it. Tomorrow, if the very core of your business becomes deemed illegal, that is obviously very worrisome, especially if it's a slightly late-stage investment. I think the stance we've been taking is despite some stray incidents which have been adverse, overall, the banking and NBFC regulator in India, if you take a 10, 20-year view, is probably arguably one of the best regulators in the country. And if you look at the kind of infrastructure that we have now for financial services in the country, you could argue that it's one of the best in the world also. So there is a generally positive thinking regulator on board. We do spend time understanding regulations, speaking to stakeholders. It is always very tricky because you do not even get black and white answers in these kind of discussions as such. But I think specifically in early stage deals, I think sometimes there will be some gray that you will operate in. For example, in the payment space right now, we're seeing some really interesting activity when it comes to Bharat QR. Now, there is some gray around the operating models there, but I think at the highest level, directionally, we will take a call based on product consensus there.
I see. So it plays a role, but it's not the key criteria you watch out for, even though regulation is very important in fintech compared to other businesses. Excellent. So let's ask you a very different question now. Fintech means so many different things to so many different people. Like his business is one part of the whole fintech ecosystem. Then, we, in our portfolios, I'm sure we have different fintech companies. It's a topic that's been belabored. We all know there are different kinds of businesses within the finance arena, and technology goes to help all of them. But just because we have, a lot of entrepreneurs here among the audience, can you hazard or can you just share with us some areas in the whole fintech, business, which you think can spawn unicorns? I like that word, by the way. And or business models or businesses in the fintech area which have still not been completely mined, and therefore you think there's an opportunity for some of the entrepreneurs there and for investors on this side to build very scalable businesses.
$1 million question. If I had that answer, I'd be talking to these guys and being on the other side. But no, to sort of talk about where I see opportunities, and I think a lot of it has already been done on the whole B2C side, right? But I still think even within that, I still don't see, I see a lot of them within the investment space, but I still think there is opportunity there. Where I think the opportunity exists, and it's harder to probably build unicorns because typically you've not built unicorns on the B2B, at least in India, because it takes much longer, I think is more on the B2B side. When you start looking at things around regulatory technologies, cybersecurity, only for financial services, things around the audit assurance in the accounting space, which is so archaic, but has not really seen too many changes happening, right? So I think those are areas, but I think those areas also mean a lot of people having to really think through and sort of seeing where those inefficiencies and can I really build something. And I think the opportunity exists. But I don't see too many of them actually coming out, at least in India as of yet. Now, if there are people who are doing it, probably these guys will know better. But my feeling is it's still not there yet. Because it's to me, I still see a lot of Me Toos.
A lot of Me Toos. So within the Me Toos, which models do you think are still not addressed as well as they should be, and therefore there are opportunity for people here to go back and think about setting up something there?
So I think a lot of these have, everybody's sort of chasing the millennials, right? And I think that's a area that technology savvy and all of that. But I think one area where I think people are still not doing it is, there's a fairly large population in this country that's also starting to go gray, which are also going to get to a point where there are retirements that are going to happen. What do I do with my retirement accounts? How do I really make sure that I continue to be able to live comfortably on my retirement if I have to do that? A lot of those I think are still not addressed. And a lot of those are sort of still looking at saying, hey, go and put money into a fund and you'll have X amount in 25 years. Now, some of these guys may be at 70s where they may not have 25 years, right? So what do I do with that kind of money? Where do I really put that kind of money and where do I really make sure it's safe enough? So I think those are some of the areas that I have not necessarily seen too many. And I think, like, I go back to cybersecurity because cybersecurity is an area where I have made personal investments. I still have not seen that many on the financial services side, and we do have logins and all of that. But I think facial recognition, fingerprint, I think there are a lot of those that can really, really develop and make it a lot more efficient and a lot more faster, right? Because especially when you start looking at financial inclusion and things like that, it makes it a lot more easier when you start looking at this from a technology perspective, especially when you start looking at financial services to be delivered in the underserved areas.
Okay, great. Dhyanesh, your ideas?
So one of the themes which we've liked a lot is around enablement of the existing channels. So, most fintechs we speak to want to disrupt the existing channel, cut out the existing channel and go direct to consumer, which is which is potentially the right thing to do. But that said, the existing channels that are there are likely not going away anywhere. If they are 95% of the market today, even 10 years from now, they'll probably still be 60 or 70%. And that's probably a great business for the balance 30%, but this 60% is still getting somewhat ignored. I think the way insurance was sold by an agent to my father 30 years ago is probably more or less exactly how it's sold today. The same for mutual funds, the same for most technology. So one of the trends we are thinking might be quite attractive is what can you do as a technology company to better equip the existing old school channels that exist. How can technology be used to make them more productive, make their break-even much quicker than what it is today, across products, be it wealth management, insurance, investments, and loans. So that's one trend which we are trying to figure out interesting plays in.
In the mature business models, are you seeing some of these startups and early stage companies grow to a certain size in certain areas where you think there's a huge opportunity and you're willing to back them?
See, the way I think about fintech, one is, of course, finance companies using technology to better their processes, to make better credit decisions. But really the 10x change, if you were to think of it in that way, which a normal finance company cannot do, will come when either because of technology, we can do different use cases, which otherwise, and we already have some interesting companies in that. So a small ticket personal loan, very short tenor, cannot be done by an offline channel. It's too expensive to be done by an offline channel. So that is a 10,000 rupee, a 5,000 rupee loan, 6 months, 3 months. I think the economics just doesn't work offline. Now that's where uniquely a fintech can build scale, can really take the market away from something. The other case, another one of my favorite companies not being funded at all is a company like Zerodha. They really took the battle to the competition and said, I'm going to do this free, and I'm going to figure out my way of making revenue through data, through other markets. So they have made a big change to the customer. So in a very classical brokerage business, which normally none of us would even look at funding, they have really made the 10x change. So there are certain, or another example I'll give you, and these are areas which I feel lending, you have already a lot happening, a lot of fintechs already heading into lending and payments. Insurance is a big space which I find very, very open. It's still being done, as you rightly said, the classical way. Health insurance, very confusing to make a decision as to what you want, how do you figure out, is there a better way to give on-the-go, short period, small ticket health insurance much, much easier and monitor the person on the go. There'll be a lot of innovation happening there. It's been a bit tougher because the insurance regulator is actually way behind RBI in terms of thinking about bringing in innovation and has kept the bar a little bit high. But use cases in insurance, we're already seeing young companies coming which are saying, I can insure your one taxi ride for 1 rupee. Can that product be delivered offline? Not possible. So another way for younger companies to think about, rather than just going the incremental way, is to say, what is it that my fintech can do, which gives that 10x difference from what an offline company can do and which uniquely only the fintech can do. We would love to look at those models early on as well, because you're then not really talking of competing, but it's a blue ocean.
So you guys are welcome to send your business plans here. They're looking at early on as well. Keywords. Let's ask you, we have the investor view now. Now, you chose your area of operation within the whole fintech space, right? Now, given what's happened since then and given what their views are you tempted to change? Would you have rather been doing something else?
Okay. How many of the audiences here have bought something online? It'll be great if people can participate. See the number of hands, count them. How many of you have taken credit online or digitally? Zilch.
These are the people who lend.
Room full of.
They're all taking credit.
This is room full
You
of
have to ask them where
entrepreneurs.
they land, yeah.
Okay, if you go to the other room, and there are manufacturers there and a lot of ecosystems there, and if you ask them how many of them are enabling their ecosystems, the supply chain to be financed digitally, zero. The difference on the lending side, which has been made by entrepreneurs like me or many others, is still very, very insignificant. The day an entrepreneur is sitting somewhere in tier 2, tier 3 town and he wants a credit, the way he goes to a Flipkart or an Amazon and orders his shoes or orders a shirt, the day he needs a credit, instead of calling his uncle, for 3 lakh rupee, he comes to, downloads an app and, takes 3 lakhs for a 10-day period or 15-day period. As she rightly said, for 15-day credit. Those are the days when the real disruptions by the lenders like us will be made. So to me, it's still a huge opportunity.
So you're still on the same path.
Yeah.
You think it's just scratching the surface now.
Absolutely.
So there are two business models that come to mind, from what you just now said. One is, if you were to lend that money to that guy who's buying the shoe or whatever, how do you evaluate his credit? Online instantly. A lot of people who are working on that problem, but as he said, it's just scratching the surface, right? And the second, obviously, is after that guy has wore his shoes, he's run away.
How do you catch him?
Someone's going to go and get the money back. Right? Another business model. So yes, I think that's the beauty of where we find ourselves in India. There's so many opportunities. There's so many problems to be solved that no matter what area we guys are working on, just hard work, discipline, perseverance, and I think my firm belief, and I'm happy to get your views on this. I think in India, there's space for, over the next 5 years, at least as many unicorns, 5, 10 unicorns. I have no doubts in my mind because of all the things that I see around us. But happy to get your views. What do you guys think? He'll definitely be one of those. So, how about you guys? What do you think? Are we going to see a lot of unicorns come up, in the fintech area going forward?
I think you'll see a couple probably.
So let me just give you an option. Now you're just saying yes to agree with me. So is India's path a path that will create or spawn unicorns, or is India's path, and there's nothing wrong with the other one as well, to have a lot of smaller fintech companies, $100 million, etc. A unicorn is just one number. So essentially, what we are trying to understand is, do you think there'll be few guys who will control a lot and therefore become larger, or you think India is structured in such a manner that there'll be a number of smaller businesses in every small area in the fintech landscape, which will be large in their own right, but maybe not a unicorn, but hundreds of millions of dollars, for example?
I would love to hear what they have to say. But I'll tell you. I think there are a couple of them that will definitely, get built. But again, I think as the markets mature and as global sort of thought process also sort of come into the investor or the operator mindset, the entrepreneur mindset here, I think you'll also start seeing consolidations happen. And I think consolidations haven't happened in India, but that's an opportunity, and I think global investors may probably also sort of step in to actually play that role. Now, when that is happening, $1 million question again. But I think that opportunity exists, which also means in the future, potential and unicorn could be created just by sort of going ahead and doing a consolidation. But that's going to be fairly aggressive, very, very ambitious. Do we really have the kind of mindset to actually be able to do it? And plus, do we really have the kind of talent to actually be able to pull something like that off, right? But my feeling is those days are coming.
Excellent, good, sounds good. How about you, Dhyanesh?
Yeah, I think when it comes to traditional financial services, the business model lends itself well to fragmentation because distribution and local understanding becomes very key. When it comes to serious tech enablement, you start chipping some of that away. So for example, you're lending in a few hundred cities already. For a 3-year-old company, that's pretty phenomenal. When it comes to, again, product distribution, we're talking about companies who are looking at pan-India or at least a good part of India at one time. So the traditional model of someone being strong in Maharashtra, someone in Kerala, etc., is going to move away. So we might just move into a model where there might not be one unilateral pan-India leader, but an oligopolistic setup where in each segment we will have a few leaders who will emerge and a lot of consolidation, as Vinod was mentioning, where smaller players get subsumed.
Excellent. Now you guys looking at it.
If unicorn is $1 billion valuation, we'll see it sooner rather than later. It's just the way the mathematics works in some of the, at least the lending side businesses, which continuously need capital. So their capital base is going to be high. So if you see businesses that scale to 5,000, 7,000 crore AUMs, then you are going to see unicorns because they will have enough capital, and that enough capital will be valued at enough multiple of capital. So it's only a matter of time. It's a point of scaling up. So you will see that faster on the lending side, faster on the insurance side, probably in all of the other businesses, data, maybe the wealth side, which is where you will have very valuable businesses, but by nature they will be smaller in valuation.
When are you becoming a unicorn?
When I convince her to invest.
All right. One business plan already reached. All right. So, just one last area of discussion to get your views, and then I think we'll just open up for a few Q&A if we have 5 minutes. So let's start with you, Dhyanesh. There's this whole thing about disruption and innovation that we keep talking about. Before we get to the fintech area, overall, if I look at the numbers, India scores very, very poorly on the innovation part of the equation. Some data, simple data point, and I keep talking about it. If you look at the last 5 years, the number of patents filed in the US, China, and India, just these 3 countries, if you compare, I think we are far, far, far behind. So China, for example, in the last 5 years, did 4 million patent filings. The US was 6 million. You want to take a guess about how many patents India filed in the last 5 years? A 250,000. It's not that bad. I mean, it's pretty good. So that's the problem. Yesterday, one of the speakers, Mr. Murthy, Narayan Murthy, everybody knows him. He said that, and I kind of agree with that in this context as well, that we Indians feel satisfied very soon. You'll do a little bit and you'll say, oh yeah, I'm set in life. So I think we need to be more ambitious and adventurous. But linking that thought to what I want you to answer is, given that fintech is a very heavily regulated area, we cannot just be innovating things for the heck of it, right? It's not a free for all. You have a regulator in every area that you want to, and there are multiple regulators, by the way. There'll be a mobile, and there'll be the app that you have, and then there'll be the whole service that are rolling out. So with all with all of those constraints, are you seeing very innovative business models out there? Are you seeing innovative technology out there, or you think there's a long way to go?
So we are seeing a mix. So if I look at what would make a business model succeed in fintech, I think while there are so many things at the highest level, there are 2 things. One is the idea, which is where innovation would rest, which is what is the problem I'm attacking and how am I using technology or whatever else out there to solve that and do things differently. And second is execution. And unfortunately, there are a lot of businesses who have very innovative ideas backed with poor execution. There are a lot of ideas which are vice versa, which is strong executors, but they're trying to do nothing different whatsoever. An ideal combination, obviously, is a breakthrough idea along with breakthrough execution, which is great. That is the unicorn that you will be counting. Yeah, totally. But I think there is also a lot of merit in what I would call incremental innovation, which is I'm not going to totally disrupt the way business happens altogether. Instead, I've identified a particular problem. I'm going to use technology to solve that particular problem, so I'm incrementally better than everyone else in the market. And then I'm going to have very tight execution around that, which is my barrier. Because one of the issues we have in fintech today is there is very little IP. So a lot of ideas get imitated. There is someone who starts a particular platform. Within a matter of 1 year, there'll be 20 such platforms out there. In which case, strong execution can become the barrier. That will guarantee you can grow 3x as fast as someone else. Before you know it, you're well ahead of competition. So that's how I'm thinking about innovation in context of fintech.
Excellent. Let's open this for Q&A. If you guys have any questions, you can address it to any one of the panelists specifically, or you can just direct it to us. Yes, we have a question there at the back. Wait. Neither can we hear nor can others hear. I think we'll get you a mic. You can take one from here. We've got a lot of them.
So my question is, see the economies to which we are competing with, the interest rates in India are very high, okay, and a lot of defaults are because the interest rates are high. Okay, so my question is like where you see interest rate going, and is this NBFC or FinTech thing is affecting the increase of the interest rates as the number of stakeholders increase? So there's a bank and then there's this NBFC. So what is your take on that?
Do you want to take this?
So, if you look at the market which most NBFCs and there are a lot of traditional NBFCs and like before I started this, I've been in banking and have taken few of those NBFCs public. So these NBFCs have got a lot of new customers into the formal ecosystem. If we talk about us at Flexiloans, for example, 50% of our borrowers are first-time business loans borrowers. So they are not coming from traditional banks. They are not coming from traditional NBFCs. Most of them are coming from informal ecosystems where the kind of interest rates they are paying is just too high. So to answer your specific question, whether NBFCs are increasing rates, no. Versus comparing them with the informal ecosystems, they're actually bringing it down significantly. And you'll be surprised, and I've personally visited a lot of these ecosystems to, figure out on the ground how it happens. And I've seen areas where, entrepreneurs are charged 70% IRR without they even knowing that. They're paying 70% kind of interest rates. And that's where, a lot of manipulations are happening. So, honestly, a lot of game changing is happening for Indian entrepreneurs through this NBFC route. It's good. How the markets are there for NBFCs. So lending for NBFCs themselves is expensive from most banks, and there'll be always that difference, and honestly that should not impact so much because they are going to a newer set of customers where banks do not do lending.
I think from a macroeconomic point of view, this is the on-the-ground point of view. If you look at it from top down, there's so many determinants of interest rates. It's not just the business structure that we're discussing here. There's currency, there's competitiveness, there's GDP growth, all of that. One of those elements is demand supply of money, right? In addition to all of the others. So I think what businesses like his and this whole value chain of the larger banks and smaller banks and then NBFCs and then local lenders and now the whole technology players who are trying to lend money as a platform, I think they are actually democratizing the whole thing. So they are actually working to help reduce that cost or that component of the overall interest rates. So I think it's a great thing. There was one more question at the back somewhere. Okay, let's have you here.
My name is Anant, and I'm developing blockchain solutions across the energy commodity trading value chain. So I'm sorry, with Dhyanesh, I owe you one. As Dhyanesh said earlier, IP might be a problem. So my IP won't be in the blockchain, obviously. It will be in our combined 40, 50 years experiences and the algorithms we put in. But I'm curious if you or other venture capital firms are open to running prototypes on the companies that you are invested in. That would be a great way to demonstrate functionality. Because it's very hard to approach people. I know venture capital firms, angels, and across different spectrums, but people who are more convinced by revenues might be better convinced by a demonstration across their invested companies. Would that something you would be considering?
Sorry, I didn't understand the question.
So if I run a prototype on your invested companies' chains, value chain, supply chain, pick up your phrase.
So I think his question is, let me understand. So what you're saying is, whatever product or whatever platform you're building, if you were to sort of demonstrate a
absolutely
POC on companies that you have invested in,
or you would be same, anybody,
and
anybody.
would that sort of interest you in sort of saying, I'll invest in him?
I would say it need not be my company. It could be any good prototype, any good POC is something which would be good enough to understand the technology and take a business call. And I think at the end of the day, the call to invest will be basis various things. Right? It will be basis the perceived scope of that to grow to a certain level. What the prototype solves for is that it works. Yeah. That, okay, if 1 rupee is going in, 1 rupee is coming out, so the technology works. Yeah. For all other aspects, I guess it will always be a business call and judgment which will lead into an investment decision.
We have one question on that side.
Yeah. Hi, my name is Shruta. Basically, we have a company. We are a retail tech platform. We give a lot of microfinances to the entrepreneurs at tier 2 and tier 3 cities. The main challenge that we face is when we ask the NBFCs or somebody to give the loans to these people, generally the interest rate that they give, I agree it's lower than the market rate like he mentioned, but the 5,000 and the 10,000 loan that they generally look out for the capital investment, the business trading. You mentioned that someone has innovated it to be at a low cost, a very, at a zero cost kind of a solution. I think that's what you mentioned, right, ma'am? You mentioned something like that, 5,000 or 10,000 rupee loan.
The operating cost of that, yeah.
Okay. What I wanted to understand is what is it that's stopping NBFCs to loan those micro loans to those consumers? Because the credit scoring is very bad over there actually. They don't have a credit score, a CIBIL score over there, right? So how do we, that's the challenge that we generally face.
You're asking about actually. Why is it still expensive to lend to that?
Yes.
If I just look, I'm going to answer from a balance sheet perspective. When I look at many companies who are lending small loans, especially in tier 2, tier 3 cities, the largest part of their cost is operating cost. So if we actually look at it, and we all of us have heard that microfinance rates have been very high and so on and so forth. Even if you take, I'm going to use some technical terms, a net interest margin of 10%, that is a 10% difference between their cost of funds and the funds at which they lend at, 6 to 7% goes in operating cost of people actually monitoring that loan, collecting that loan back, and the cost goes up as the ticket size keeps dropping of the loan, right? And actually giving it and actually getting it back. So if technology disrupts that, it is going to bring that whole cost on. Otherwise, you're talking about 10 minus 6 or 7, you're down to 3, then you have to provide for credit costs. There are always going to be some NPAs or some non-performing assets. So even if I assume that's benign, that's 1%, that leaves 2% for the shareholders at the end of the day. And if you leverage that 5 times or 6 times, it's not a very big ROE. It's a 12% return on equity, which is low. For equity investors, you need a return on equity which is a little bit richer. So this equation has to fit somehow, and that's what is keeping that rate up there high in two parts. One is cost of funds, the other is actual cost of operations. But I think if you look at it linearly, it's getting better with
completely
time.
agree. It's getting better. Initially it was very difficult, but now yes, there are NBFCs who are promoting and who are helping it out. But I still feel there is a challenge in getting them agree to the term, to actually lend those people out there. So that's what it is. Yeah. Okay. Thanks.
All right. One last question. There you go. Yeah. Well, you were the fastest. Yeah.
Companies like Paytm and now the advent of UPI. I know that UPI transactions have been increasing over the years since it started, but I just want to know from your perspective, what is the hurdle in reaching tier 3, tier 4 in terms of acceptance of the technology, in terms of connectivity, and in terms of general acceptance of the entire system that NPC has started? Although what we read in the newspapers, we don't know where it's coming from. I just want to know, how do you expand into these uncharted territories?
So let me ask, what makes you think that it's not being sort of adopted or accepted in tier 3, tier 4 towns?
I mean, it is being any untouched points that we can still venture into. So I used to work in a payments company where we found this to be a challenge because there was not an acceptance of technology and there was connectivity problems.
So I'll give you my perspective. I now see when I go to tier 3, tier 4 towns in Karnataka, for example, where my family lives, Chikmagalur, even places smaller than that, right? Very traditional small towns. I mean, technology is now becoming ubiquitous, especially when it also comes to financial services, right? I'm talking about, people who are sort of getting paid at that coffee plantation worker level, right? So I think it's happening, but it's happening probably at a slower pace. But the slow pace is probably because of the fact that, look, I mean, anything that has to sort of do this, which disrupts it, is going to take some time to be adopted. And I think it's a matter of time, but there's some patience that is also required because we're not going to be able to change this overnight, in my opinion.
Yeah, there's a lot of infrastructure build out that has to happen before this becomes, omnipresent everywhere across India. So I think, like we all know, in cities, the larger cities, everybody around them have a phone and they're using it to make these transactions, etc. Right? And not just payment. They're like really serious business getting done on the phone, on the mobile phone, or other technologies. So it's a matter of time, like you said. It's the direction is set. It doesn't matter what regulations come in, or it doesn't matter, I think, what governments come in the next election, etc. I think the direction for India is pretty clear. It's a matter of when. It's not a matter of if it will happen or not. You want to add something, Dhyanesh, to this?
No, not much. I think I agree with what both of you said, which is, if you just look at e-commerce, right? I think 10 years back, 100% of e-commerce shopping would have happened between Bombay, Delhi, and Bangalore. Today, that number is entirely different. So at some level, any new innovation typically will get picked up first by the more urban and relatively affluent segments. Once it works there, you will see serious investment going into the next set of customers. But at the end of the day, none of this is free. Some company, some entrepreneur has to put his eggs into the basket of saying, I'm going to take a bet on tier 3. And today, probably, that bet is better placed on tier 1 to start with. But once it works here, it will percolate down.
Excellent. Let me get your view on this, because we, again, have a lot of entrepreneurs here who are interested in FinTech, per se. One piece of advice for these guys who are trying to set up their business, etc.
So these are exciting times, still continues, for FinTech, and there are a lot of real problems out there to be solved. So don't just try and read that, okay, this company is doing that and they've got funding and we'll do the same thing and get funding as well. If you're a young entrepreneur, try and figure out the niche where you see a real problem. Again, it's what we hear from most of the guys. It's basics, but you have to get those basics right and get hundreds and thousands of customers and have those benchmarks that how you're scaling month on month in terms of number of customers. Everything else will follow. Investors and customers, if you're solving that real problem.
Excellent. So solve the real problem. Okay, thank you so much. I think this was good inputs, and I hope all of you guys have got something out of this panel in the last 30 minutes. Thank you.